Hello there traders, and welcome to today's week ahead review by Bretton. It's sponsored by 10 Trade, and we'll be going on to the 10 Trade Academy's dashboard as well. So the first full week of September basically sees a more saturated economic calendar as the summer unofficially comes to an end. So as this is the case every week, and particularly of recent mid-week energy inventories figures should prove among the most impactful for crude oil prices beyond the headlines. So on Tuesday, September 6, which is tomorrow, the September Reserve Bank of Australia rate decision will be announced at 4:30 GMT. So I'll just be going through all the happenings that's going on starting from tomorrow, but at the very end I'll then go over with what's going on for today. Now, so on Tuesday again, September the 6th, the September Reserve Bank of Australia 4:30 GMT, the August US non-manufacturing PMI as well is due at 2 o'clock GMT. On Wednesday, September the 7th, the second quarter of 2022 Australia's GDP report will be published at 1:30 GMT. So these are all important happenings, as well as the second quarter of the Euro area GDP report will be released at 9 GMT. The September Bank of Canada rate decision will be announced at 14 GMT, 14:00, which is 2 p.m. GMT. The weekly US API crude oil stock change data are due at 8:30 GMT. The final second quarter 2022 Japan's GDP report will be published at 11:50 GMT. Now, on Thursday, September the 8th, the August Mexican inflation, which is quite an important data that has connections with its surrounding countries as well, including the USA. And the inflation report is basically due at 11 GMT. Now, the September European Central Bank's rate decisions will be announced at 12:15 GMT, followed by the ECB President Lagarde's press conference at 12:45 GMT. So Federal Chairs Powell will give a speech at 1:10 GMT. Now, the weekly US EIA energy inventories and production report will be released at 3 p.m. GMT. Now, on Friday, September 9th, the August Chinese inflation report will be published at 1:30 GMT. Now, the August Canada Jobs Report, or Employment Change and Unemployment Rate, is due at 12:30 GMT. Now, an update as of last week's NFP and happenings to be aware of when markets opens today. So I'll go through of what will have actually happened with the NFP as of last week on Friday, and then we'll take a look at today's happening and what could actually potentially impact the market for today. So let's take a look at today's report. Now, the US stocks opened higher on Friday after the US non-farm payrolls report crossed the wires, which showed a gain of 315,000 jobs in August. Okay, so that was also reported yesterday, and basically this is what we were talking about, an increase, and we have expected an increase of the jobs data, and that has actually happened, 315,000 jobs, and that's according to Bloomberg's consensus forecast as well, although wages didn't rise as much as expected. Now, the wage data was encouraging for the US inflation outlook, which weighed on gold-friendly break-even rates. So the gold, which is XAU USD, rose on Friday, but the yellow metal traded almost 1.5% lower throughout the week. Now, let's talk about today, the 5th of September 2022. Now, let's look at what we need to be aware of that could impact markets in some way in today's trading. Okay, today's trading sessions for various asset classes. Now, one of the most important things to to know is today is Labor Day, so it's public holiday in the US, so most of the markets are closed, and basically the stock markets are closed, various other trading financial institution, banks are all closed in the US today. So 2:45 a.m. we'll actually expect Chinese Caixin Service PMI. Now the index is expected to fall to 54.2, so there's a bit of a bearish sentiment expected there, and it would basically impact CNH crosses. Now at 12:30 p.m. this is really key for those traders that are going to be trading GBP crosses especially, or interested in the UK economy and various other things that would be impacted by the UK in general, because there is a new UK Prime Minister that will be announced today. Now the winner of the race to succeed Boris Johnson as Prime Minister will be declared with Foreign Secretary Liz Truss firmly out in the front at the moment. So whoever wins faces a major headache in the form of surging inflation and energy prices, necessitating a significant economic response. So the markets to watch, of course, FTSE 100 and 250s in the stock side of things, and also GBP crosses, as it will be giving us lots of opportunities and as well as risk to look out for. So that's basically it on what is to expect as of today, also for the week ahead. But what I would like to do as this moment of time is to actually go on to my screen, and so we can actually take a look at the chart. So give me a second. Okay, I guess you guys can see my screen at the moment on 10 Trades MT5 platform. Okay, so we have taken a look at various instruments as of last week on all three occasions, Mondays, Wednesdays and Fridays event, and basically we have gone over the Euro USD that I would like to talk to you guys about. And this has actually moved as expected to the downside, Euro USD, as we have actually talked about movements to the downside to be expected following the NFP figures. So what had happened was a depreciation in price for Euro USD, and it did, let me just show you guys on what actually happened. And you can actually see that there was this giant bearish candle on the daily chart. Let's move on to the 4-hour chart as well. Now this is Euro USD that we're talking about, and I hope you guys remember that we have actually talked about a range that the Euro USD is trading in within the 1.000 area right down to the 0.9910 area. Okay, so this is an area that it is trading at the moment, and we have got reasons to believe or factors that would actually drive further movements to the downside for Euro USD. So there are further selling opportunities, in my opinion, for the Euro USD. Now let's take a look at what has actually been released as of last week, as of Friday, in terms of trading areas for Euro USD. And as we have mentioned about that whole area that needs to be taken into consideration is the level of 0.9970 that could actually trigger a selling opportunity at that time, and that has actually been triggered already, giving traders a selling opportunity that's worth close to about 90 pips or so. So that 90 pips depreciation, if you were to be trading at let's say $1 per pip, that would actually be giving you $90 or so, minus the spreads and so on your opportunity in terms of profit to gain. But if you are were to trade at $10 or one lot and that basically gives you a 900 US dollars gain if you're actually trading on that opportunity right there. So this has actually been a very successful analysis, a very successful trade. Congratulations to traders who have actually gained that movement to the downside on a sell trade idea that I have actually given as of Friday. In Friday's recording, you'll be able to actually see that exactly on how we have actually plotted that area of entry at 0.9970 and then to look at 0.9910 as your minimum exit area or take profit area. So that would have given you a minimum of 40 pips or so, 60 pips or so, and basically a maximum of about 90 pips or so on that trading opportunity for Euro USD. So are we looking at opportunities to the upside or reversals and things like that? The answer to that is a yes and a no. It does actually depend on today's movements in the market, and I foresee further downside for the Euro USD because we're looking at loads of inflationary mode or sentiments in the States, basically gearing up towards giving a rise to the dollar as opposed to further fall of the dollar at this moment of time, because there's a lot of traders out there. They have actually questioned about whether or not the US dollar or US crosses per se have actually gone through a overbought kind of scenario. Now, in my personal opinion, I don't believe in the overbought and the oversold of instruments, because it's just really a very subjective topic to actually discuss on whether or not we could actually rely on indicators as well that would actually be communicating overbought and oversold. So, in other words, Euro USD has got more opportunities, but in my opinion, more selling opportunities targeting to the downside of the Euro USD. Now let me demonstrate the drawing of a very interesting pattern that's called the ABCD pattern right here, and that could actually give you an idea of how far more are we actually expecting the Euro USD to potentially fall to. Now, using the geometric patterns itself, if you draw the A point to the B point, which is from a high to a low, then you click onto the control button right there, you're able to get a parallel line like this here in order for us to actually draw an ABCD pattern. Now, if you've got an ABCD pattern with AB's length equals C to D, then you're able to use quadrilaterals. We call them quadrilaterals in the geometrics in mathematics to actually explain what quadrilaterals are. So they are these parallel lines that could actually help us to predict where Euro USD could potentially fall to the 9865 area, potentially, if at all we have got further downside of the Eurozone. Let's say we've got sentiments that are going to be communicating more bearish sentiments or more bearish factors that would drive the Euro to the downside, then we could actually expect it to come down towards the 9865 area. So let's continue drawing this pattern. We should always start with just a common ABCD pattern, as I've drawn in the blue line that you can see on my screen. And for those who would like to confirm whether you can see my screen clearly, you can always type into the chat box. Let me know that you can hear me okay, and also see my screen perfectly. All right, so here, this is your ABCD normal pattern, all right, a common pattern. We call it a normal chart pattern that is not mine originally, which is called the ABCD pattern. So your A point starts off with here, and then your B point, and then your C, and then goes down to the D point right here. Now, in order for us to convert this pattern to a geometric pattern, all you need to do is to just drag a point from point A. You need to drag a line to point D, and that would then convert this ABCD common pattern into a geometric ABCD pattern instead. Now, when you have the geometric ABCD pattern, there's a crossover of we call it a centroid area, which is the cross between the AD point and the BC, the AD line and the B to C line, and that is that cross right there. Now that cross could actually mark for you a potential entry area. Now if we were to actually just use a normal pattern or based on even the harmonic pattern, so you've got three categories of price patterns. You've got the usual or common price patterns, which are just called chart patterns, like the head and shoulders, double bottom, double top, the ABCD pattern as well. These are all categorized as your common chart patterns. And then you've got the harmonic patterns as well. Now these harmonic patterns are basically patterns that are called the, you've got a butterfly pattern, you've got a Gartley pattern as well, and various other ones. These ones are categorized within the category of harmonic patterns. Now we've also got the geometric patterns that's created and copyrighted by myself. So I have actually used the common ABCD pattern to actually improvise and improve it to create geometric patterns. Now the reason for that is because if you were to trade using harmonic patterns, which are great patterns, as well as the chart patterns, you are not given the entry points and also a subject of referral using Fibonacci extensions to actually predict where the price could actually fall or rise towards to using that particular pattern. But with geometric patterns, you are given areas that could actually give you a hint on where to enter and where to actually exit based on the patterns itself. So that's an area that have actually improved following the chart patterns as well as the harmonic pattern. Okay, so here for example we have got the crossed area, which is called the centroid. That would actually be the area that could trigger the sell. So any price level that's under the 9972 area, which basically is safe to say if it's 9970 entry area, could then be your entry point from earlier on, and that could actually then be targeted to the end of the D point, and that would give you about 100 pips or so at 0.9865 or 9866. So that's 100 pips or so potential. Now the price have actually progressed really well following this pattern. Now we use a lot of Fibonacci extensions and retracements. Now one of the most common way of predicting that D point, we've got two ways of predicting the D point following a geometric pattern, right? So we'll follow through this area as well later on in our 12 o'clock webinar, Cyprus time, which basically talks about the ingredients of success in trading, whether it's technical as well as fundamental. I'll touch a little bit upon a checklist on technical analysis and a checklist on fundamental analysis as well, that would both make up ingredients of success when you're analyzing the markets. Okay, so here for example we have got the D point predicted or forecasted from the quadrilaterals, which basically is the same length of AB, and then you draw it towards CD and you get a D point right there. So that's your number one way of predicting where D point could actually reach or your take profit. Now the second way is to use the Fibonacci retracement extension. Now I'll just give you one sample. I've got many or a range of retracements and extension that has been proven to work really well. So one of it is, I'll give you a basic 4 retracement ratios, which are the 38.2%, the 50%, the 61.8% golden ratio, as well as the 78.6%. So these are the basic 4 retracement ratios on Fibonacci. Now when you know where C point has actually landed on either one of these, then you can use your extension as the predictor, or where you could actually forecast the price to end. Okay, so I'll give you a bit of a sample of how that works, because most of what I am covering on geometric patterns will be turned into a course, and there's a course that will be waiting for you very, very soon, and that would actually then cover every ingredient of the geometric patterns analysis and patterns. So here, if we were to click onto the A point and we drag it from A right down to the B point, we need to actually look at where has the C point sort of landed closest to. So in this case, it has actually landed in between 61.8% and the 78.6%. So it's closest to the 61.8%, and that basically gives us the ability to predict using extension as well. So what that means is if it is 61.8%, then the extension could be predicted at 1.618%. Okay, so this means that if I were to drag the Fibonacci this time around from B to C, I would then look for the 1.618% area right there. So here it's giving us another hint that the price could potentially fall further, not only at the 0.9865. If at all we have got a strongish trend to actually drive euro further down, then there is another possibility of euro USD going downwards and towards the 0.9835 area. Okay, so I hope that's clear for you guys. So there's this is basically a trade idea, and I will be turning it into a trade signal as well when I execute the trade live on this 10 trade platform as well, on the MT5 10 trade platform. So here, this is basically, let's us recap at the moment, because we have got price already triggered for Euro USD some time ago at 9970 right here. Right now it's trading just under 9928. Now the problem with it is that we are looking at price at this moment of time at 9928, really close. As it trades lower, for example, it would bump into the 9920 psychological level. So if it bumps to that level or close to the 9920, what is expected is a mini bounce, possibly a bounce or a retracement. Now usually the 4 sets of psychological numbers based on price are where we always expect turnaround of prices, you know, reversals and things like that. So here, for example, we have got a sample or an example right here. So here, if we look at price falling there, and then the opening price itself was at 0.9915, which is 5 pips away from the 20 psychological level. So just as a recap, we have got 4 sets of psychological numbers, not in order at all. We have got the 00, 20, 50 and 80, right? So here, for example, we have got 9922 at this moment of time, where prices is trading at 9922. So because it's trading at 9922, as it goes lower, it'll hit the 9920 psychological level. So what does that mean? That means that it's not an appropriate or possibly not an ideal selling price that we have at this moment of time. So the ideal selling price, in my opinion, would actually be at least 10 pips under the 9920 level, which is the psychological level. So 10 pips under 20 would actually make it at 9910. So 9910 and lower would actually be a better price to actually sell. So for those who want to set either pending orders or you want to trade on the spot, you know, you are welcome to do that, but you want to be really careful in terms of getting out or exiting the trade. So the exiting of the trade could actually be based on the D point area right here. Now the D point area right here could actually be potentially not too bad, not too good a price at 98665, right? So those traders who apply the psychological level would want to actually even exit a little bit what do you call that, a little bit higher as well before price hits 0.9865. But I would say that if you are wanting to enter the trade for a sell, an ideal price would actually be at 9910, but your exit price could be at 0.9865. So there you go. This is your trade idea as well for Euro USD on the sell side for Euro USD. The reason for that as well is largely driven by the strength of the US dollar. Now the US dollar is expected, USD crosses as well, is expected to ride through that inflationary mode, and there is a lot of gearing factors from the fundamental side of it to actually expect a rate hike as well. And basically with that rate hike and a lot of things that can actually be announced as soon as a week or 2 weeks time, this month itself, would actually bring about a lot of building up sentiments for the USD to be on the upside or hawkish as opposed to a downside. So that is basically a driving factor for Euro USD to be expected to further fall. Now that further fall technically could actually be seen through this geometric pattern that you can actually see, but also as we go on to a higher time frame, it is important for us to actually look left as well to actually monitor selling power because of the bias to the downside for Euro USD. We want to actually focus on bearish mother candles to the left as well, that has been trading in the past, but also with current price trading in the middle of any mother candles that you can actually see. So let me prove to you, show you basically what I mean, and we'll just take you to the left of the chart. I'm just scrolling really fast to the left at the moment, just to give you an idea of whether or not we could actually spot some bearish mother candles in the past that basically has been trading or traded in the past, but at the level of current price at this moment of time. Okay, so let's just, perhaps a shortcut would actually would be to use a higher time frame. Okay, there we go. So on the weekly chart, it looks a little bit more obvious onto some price action or some selling pressure that has actually happened and triggered or motivated by some huge mother candles of the past, right? The body of the mother candles. Now, the body of the mother candles itself, as we can actually see, we have got various, and the one that is really obvious is the one that has actually happened quite some time back, and that's long way back, actually. In the 1970s, for example, we have had that major fall of price with that selling pressure with a single mother candle, and that single mother candle drop itself was actually worth about 230 pips on that one there. So as I go to more recent one, we have got a drop of price and then reverse as a bullish mother candle as well on that one there, and that is actually a very significant drop as well before it actually turned into a bullish movement to the upside. So this is actually a good sign as well when we looked at a very significant bullish candle in the past for Euro USD, and this one here basically was in the 1980s. So in April 1980, that rise of price with a single bullish candle was very, very significant. And let me tell you how many pips worth was that body of that mother candle right there. Was worth about 520 pips or so of movement in that one single mother candle itself, or body of that mother candle. So this is a very significant move. Now this mother candle right here, even though it's, you know, in the 1980s or whatever, it doesn't really matter, because it's really important for us to actually have that data collected and viewed as well as a very significant move. Now what that could actually help us with is to look at the limit of the price fall for Euro USD. So here, for example, the opening price of of this mother candle was actually at 9899. So now the price is at 9910. So we know now that there is a very significant very significant support based on the opening price of this mother candle at 9899, right? So that 9899 could potentially prove as a very significant support. So what I would do is to mark that at 9899, just so that we are aware that this is a very significant support. I will mark that as a blue line as well. So let's go on to this one here, and 0.9899. Okay, there you go. And that's really close to the current price as well at this moment of time. Let's go back to the 4-hour chart, let's say. Okay, and now let us look at significant price. So at this moment of time, just by doing that very simple technique or approach in looking back at previous mother candles as well could actually help you intensively. Now, this is basically where we could have that limit, because you know what would actually normally happen is retail traders will get really excited when you get a very long or strong mother candle that is actually coming downwards. Let's say we have got a movement to the downside and it's motivated by something in the news or anything that have actually happened, and then because you've attended this webinar, then you would actually feel that okay, it's definitely a downtrend that is going through, but we need to be very aware that there may be a limit of that downtrend, and that has already been communicated or hinted by a single candle movement that we can actually see on the chart right now. Even on the 4-hour chart, you could actually see that this is more or less like a pin top or a tabletop type pattern for a candlestick. Now this one here has got a wick to the upside and a wick to the downside. Now that wick to the upside and downside marks uncertainty as well, so that is a hint right there that, you know, anything could actually happen, and if anything could actually happen, that spells out uncertainty in the market. So this actually confirms that we shouldn't actually get overly excited with a downward move too much to the downside, only because we have actually viewed the very bullish mother candle that's worth about 500 plus pips at that time, and that could actually, the opening price of that mother candle itself could actually help us in understanding that that could actually be a level of support for price to actually bounce up from that level of 9899. So now prices are at the 9915 area, so an ideal price of entry would actually be 9910 and below. Okay, so as you take that step to actually enter, let's say at 9910, that you can actually enter at an ideal selling price of 9910, let's say, and maybe not to actually aim directly at targeting you know, the D point right there. Potentially it would probably be slightly above that 9899 area, because the next point of entry would actually be ideally at 9890 and below. So you've got close to about 15 pips or so in the short run to actually ride along, but it's reasonably risky in that way, because the blue line where I have predicted, based on my opinion, on a potential support would actually be at 9899 area. Okay, have you guys got any questions at all? Any questions so far on Euro USD? Congratulations to those who have actually ridden along this trade idea as of Friday. We've shared a lot on Friday on Euro USD because hence the reason I covered a lot on Euro USD as well, being the most traded pair out there in the market, and it's basically spelled out some opportunity of selling at the time and also now. So if you guys have got any questions on Euro USD before we move on to gold as well. All right, guys, any questions? You guys can definitely hear me loud and clear, right? All right, no questions, guys. Perhaps we'll move along to the gold that we've also talked about, which basically dropped and hit the TP on the dot and triggered the this pattern right here for gold on the daily chart was drawn, perhaps about a couple of weeks or close to about a month back, and that actually triggered the centroid area, and we traded basically on a sell for gold based on that centroid area of sell at we sold at 1746. Sorry about that. Let me adjust my. There we go. Sorry about that, guys. Okay, so we have got that really successful trade and pattern working out or worked out really well, and now at this moment of time prices for gold have coincidentally reversed from the D point onwards upwards. So here we are actually looking at a very crucial or significant price at 1680. So 1680 is a historical price point that's been mentioned across the mainstream media as well. Communities and forums have actually been talking about it, both from a fundamentals perspective as well as a technical perspective. So with that, I would like to mark that area of 1680 area, and let's talk about that level, and let's look at what that level signifies from what is going on at this moment of time. So I'll just mark that as a yellow line and put the price point right there. Give me a second. Okay, at 1680, right, 1680. Okay, so we have had that right there. Now, the good news with current price right now is that it has appreciated way above that 1680 area. Now, we are also looking at some significant areas based on the price action of the mother candles itself. Now it's trading gold versus the USD, or XAU USD is trading at 1712 area. Okay, and it is actually looking like it's trading in between areas that we have marked as support. So it has actually gone onto these three lines and bounce up exactly on either one of these three lines that we have marked last week as potential support. Now, in my guess, or in my opinion, what I would think would be driving the market or driving gold's prices upwards would actually be only after it has actually crossed and pierced through the 1715 1715 price level, which is another very significant price area, anywhere between 1715 and 1720. So as it goes, or if it does actually pierce through 1715 and then goes towards 1720 and pierces through 1720 as well, then I would see it as a opportunity to actually buy gold and looking at it towards a bias to the upside or being bullish, and that could actually then be a limit at that level once it has actually pierced through the 1720 area to give you a buying opportunity right up to the 1730s area, or better still to keep it a little bit conservative at 1725, unless it actually pierces through 1730, and then we can actually look at further buy again, trading in stages basically. So that's my opinion and my take on gold on a technical perspective, but also following what has actually happened or have happened on the fundamental side of it, especially with current inflationary economic situation, bond and buying of bond and selling of bonds in the States as well. Okay, any questions on gold, guys? Any questions on gold? All right. This is basically a technical take on both gold as well as Euro USD, and due to what would actually be going on in terms of a prime minister replacement or a new prime minister coming on board in the UK, it is expected to have more volatility and trading opportunities with for GBP crosses, as I've mentioned earlier on, as well as FTSEs, your FTSEs as well, to actually be aware of its movements and volatility, as well as liquidity levels as well for these instruments. So GBP crosses is one that I would actually be looking at for this week as well. Now, just before I end the session, I would like to go on to the heat map and just to give you a little bit of an idea of what's been going on in terms of market trends, especially very bullish or very bearish pairs as well, and just to match that up with what's been going on fundamentally, and then we'll match that up as well with the technicalities, the technical analysis side of things. Okay, so let's start off with top movers just to give you a bit of an idea. And with the top movers as of this week, as you can see, I mean, I've reversed it a little bit, whereby we have touched on very important, pairs, and basically looking at pairs that's been focused by the big boys and all that. And when we go back to the top movers, we can see that USD is definitely the one that most of the traders and investors are focusing on as of today, as of now. And you could see that from 1 to 10, we have got the USD crosses dominating from 1 to 4, and then Euro USD being the first one up there on the boards. But as we see this side of the table, we're not looking at any pairs that has got very clear trend at this moment of time. But from looking at Euro USD technically, we can say that it's proving to be picking up in momentum to the downside, but a mini correction could actually be in place at this moment of time at the 4-hour or the daily chart, aiming at the daily chart, but then within the 1-hour and 4-hour time frame, we could actually expect some corrections first before we expect further fall for the Euro USD. Then we have got various other pairs as well that actually mirrors the fundamental or the economic calendar side of it. So this is really important for us to understand that if we actually match up between the fundamental and technical side of it, we would be better off in picking out the best pair to trade for the day. Okay, all right, there you go, guys, and let's take a look at the heat map as well. Okay, just to give us a little bit of an idea of predominant trends for some predominant currencies that are actually moving in the market as of today. So here, for example, this generic table itself is not giving me a very clear or strongish trend, but as we move downwards to USD specifically, you could see that the dark blue is dominating. So the dark blue dominance basically gives us the hint that it is actually going into bullishness across several pairs, especially predominantly the GBP. So here you could see that USD is predominantly very bullish against the GBP. It's the most clear one right here. It's very strong, I would say very bullish against the GBP from the daily, weekly and the monthly chart. As we move downwards to the other currencies, we don't really see that much clarity as yet, but the ones that are really clear, would actually be USD crosses, but leading the way on that clarity is GBP USD to the downside mainly. So GBP USD, as we see it here, would actually be giving us clarity in terms of trend as well as its strength as well. If we mix that up with the fundamental factors as well, so there's a lot of uncertainty for the arrival of the new Prime Minister as well, because the sentiments in the market as it stands is that the new Prime Minister will need to actually be handling a lot of challenges, especially with surging energy prices and gas prices that's been falling, as well as inflation. So we have got falling commodity prices, especially with oil and gas. Gas is already falling tremendously right now, and that is a big problem that the new Prime Minister has to handle together with the inflation. But all this is good news for us traders in a way, if we are looking at the rise of opportunities in trading GBP crosses because of the increase in volatility, and the increase in volatility gives us the increase in opportunities to actually trade GBP crosses. Okay, so I foresee a very good week this whole week to actually trade GBP crosses and your major crosses as well. So major crosses, basically the ones that are involving the dollar in it. So there you go, guys. We have got a summary of that at the very end, and I hope it has actually been clear for you. And I would like to, if you guys have got no questions, I would end this session for now, the Monday's week ahead webinar, and then we'll see you in our next webinar that will happen in about 15 minutes time at 12 o'clock Cyprus time on the Trade Academy dashboard, together with the 10 Trade platform. So we'll be talking about ingredients that we can actually use from the platform, and various other ways of going through the trade plan using tools that are available on the 10 Academy dashboard as well. That's happening at 12 o'clock in about 10 minutes time. All right, guys, any questions at all before I end this webinar for today? No questions? Victor, good to see you. If you've got anything to add, feel free to do so. Or the rest of you guys as well, please feel free. Any questions? Okay, guys, I think that's it. That's all I have for you guys today, and we'll see you in our next session at 12 o'clock, and we'll see you there, and hope you guys have got more questions there. Thank you very much for your time, guys. Thank you, and we'll see you in our next session.